Because you told Robert Kiyosaki about a month ago that in 10 years' time, in 2031, you see Bitcoin at $12.5 million. Do you maintain that outlook?
I do maintain that outlook. And this is based on percentage expansion rates of money supplies historically. So the United States expanded into over 30% last year. And it's easy to forget, and mankind has forgotten this repeatedly throughout history. It usually takes a few generations each time, that the expansion of the money supply is governed by a law. And it's called the law of accelerating issuance and depreciation. So the more money you print, the more money you ultimately later have to print just to keep the system going. So I do expect the expansion of US M2 to double again, probably in the next 4 years. And then I expect it to double again from there. So we'll be north of 100% US M2 expansion annually by the end of the decade. At the same time, because money has this centripetal network effect, we tend towards one. That's what gold was. That's what the US dollar is. I do expect a lot of the weaker international currencies to collapse into the dollar during this transition. So I would say that global M2 today is about $100 trillion. US M2 is about 20 trillion. So it's roughly 20% of that. I would expect US M2 to expand to be about 40% of global M2 by the end of the decade. But global M2 itself will have expanded from 100 trillion due to this law of accelerating issuance and depreciation to about 1.25 quadrillion, which is $1,250 trillion. And in that time as well, I expect Bitcoin as essentially the ultimate irrepressible non-counterparty insurance policy against central banks to appreciate in tandem. So I think its purchasing power will increase to $1 million in 2021 purchasing power. But by that time, due to the expansion in the money supply from 100 trillion US M2 to 1,250 trillion M2, Bitcoin will actually be nominally valued at $12.5 million US by the end of the decade. Further, at that point, currencies tend to start hyperinflating. So I actually think fiat currency globally will be collapsed by the mid-2030s.
All right, so certainly no disagreement, I think, in terms of the expansion of the monetary supply, the M2 out there, and certainly the inflation concerns and the debasement of fiat currencies. But what makes you so confident still that Bitcoin is going to be the solution here?
Bitcoin has introduced properties of money that are as close to perfect as the world has ever had. And so what I really challenge people that are skeptical of Bitcoin to do is to ask themselves, first of all, the question, what is money? And then secondly, why was gold selected by the free market as money? Why has gold stood the test of time for over 5,000 years? What are the properties of gold that caused it to be selected? And if you do that digging, you do that homework, you're going to end up very deep into Austrian economics at some point, which is the cumulative wisdom of humanity on economics. And it stands in counter-distinction to Keynesian economics, which I would classify more as central bank propaganda. And gold and money in general is essentially selected based on 5 properties. I've covered this a lot in my work. They are divisibility, durability, recognizability, portability, scarcity. I won't expound upon them here, but feel free to dig some into Austrian economics or check out my work to see why. And essentially across those 5 properties of money, Bitcoin has perfected them in a way that the world's never seen before.
Well, Robert, the question is whether you can still make the case for Bitcoin as a store of value with the extreme volatility that we've seen just this past week, with one person having such an impact on the market, one tweet from Elon Musk sending crypto markets down or up by double-digit percentages. Can we really say that an asset or a currency with so much volatility is a store of value? Because that's been one of the concerns raised this week with the crazy volatility we've seen.
Yeah, I would say a couple of things about that. Firstly, volatility is a natural function of price discovery, and it tends to contract as market cap expands. So that's inversely proportionate to market cap. We've seen that pattern play out with Bitcoin, that its volatility is actually contracting. And secondly, as a store of value, it really comes down to how you define a store of value. So Bitcoin is an asset that's monetizing in real time. Call it $1 trillion market cap at 60,000 per Bitcoin. It's more like 700 today. It's competing for a $250 trillion marketplace, which is global store of value. So it's very nascent relative to its total addressable market. But what's unique about Bitcoin in terms of sort of a secondary definition to a store of value is how much of the total supply can I own? What are the assurances that I'm provided of owning a guaranteed fraction of the total supply? And historically, gold was the technology which best satisfied this store of value property. You knew with utmost certainty that whatever portion of the gold supply you held, you couldn't be diluted by more than roughly 2% per year. Bitcoin offers us something radically new. It's a money premised on perfect information. If I hold 1 million Bitcoin, I have 1 million of 21 million possible forever. No one can ever change that again. So it's perfect inelasticity of supply, and that is the property that market actors seek in a store of value. So Bitcoin has perfected the store of value function of money.
So going off your reference to gold, and gold has proven that it is a store of value over thousands and thousands of years. It has stood the test of time. But gold has also been used as a payment method, as a currency, from gold coins to gold bars. Transactions have been made for goods with gold. So does it matter if Bitcoin never takes off as a currency, as an actual form of payment? I mean, Elon Musk saying he no longer accepts Bitcoins for Tesla payments, and governments from Turkey to China saying it can't be used for transactions. So how does that impact the long-term viability of Bitcoin if it never really becomes a currency?
Well, the evolutionary path that gold followed was that it was initially a collectible, really adored for its beauty, and people could adorn themselves with it. Eventually it became a store of value, and that as societies began to trade, this became one of the most liquid assets because it satisfied monetary properties. It was only later then that when it started being used in trade widely, that it became a medium of exchange. It became a denominator of prices. And then finally, it becomes a unit of account. So people actually start to think in the money that they're trading with most widely. Bitcoin's following a similar path of monetization. And today I would just say that we're early in that store value phase. So ultimately, no one needs to jump the gun. We don't need to start using it as a medium of exchange immediately. The incentives for Bitcoin, it's an accumulation game or a land grab. You want to take as much territory on this absolutely scarce monetary network as you can and hold it until a certain market capitalization is reached that has incentivized you to go and want to spend it. So that's the path it's following. It doesn't matter if Elon wants to accept Bitcoin for Tesla or not. That has no impact on Bitcoin's success.
But does it matter if it never actually takes off as a currency, as a viable means of payment? And that's the case that Fed Chair Jerome Powell made today. Now, granted, he may have other incentives to discount the currency aspect of Bitcoin, but for your projections of Bitcoin reaching that $12.5 million price tag in 10 years' time, does it matter if we don't actually ever use Bitcoin to purchase things, be it cars or a cup of coffee?
No, the free market incentives take care of themselves, actually. It's the reservation demand when someone's choosing to hold Bitcoin for whatever reason, taking it off the market, that actually creates upward pressure on its price. And then those individuals that enter the market properly at the right price point, as the market cap grows from that reservation demand, they have increasing unrealized gains built into that position. So there's an increasing incentive for them to go and spend over time. So I'm not concerned at all about it being ultimately used as a medium of exchange. I think it's a natural progression of money. The difficult thing to understand for people is that we've only seen one asset monetize in this way, and it was gold. And it took thousands of years. Bitcoin, being on a digital, epistemic playing field, is just happening much more quickly.
So looking at the volatility that we've seen this week, and some areas for concern. Elon Musk, we've covered that he doesn't want to accept Bitcoin, but that's also linked to his views that it's no longer seen as environmentally friendly. On top of that, we had China saying that they're going to ban the use of currency transactions. Then, as I mentioned, we heard from the Treasury that the IRS is going to get more aggressive on the tax side. The government of India is saying it may form a panel of experts to examine regulating cryptocurrencies. So when you look at all of these factors together, what is your near-term outlook for Bitcoin?
Yeah, I would say, frankly, we've seen almost everything you just said could have been said equally 4 to 5 years ago. Every time we're in a bull market, every regulatory agency in the world wants to come out and say they're doing this or that to control Bitcoin and tax it or whatever, what may have you. But ultimately, it's just Bitcoin is a game that plays by its own rules. So it's going to bend all of the regulators around it over time. And as far as the short-term outlook goes, I think we are 12 months into the bull market, frankly. So historically, the Bitcoin halving triggers a bull run that persists for about 12 to 18 months after each event. So the last halving, in which Bitcoin's inflation rate was cut from 12.5 Bitcoin to 6.25 per block, was in May 2020. Historically, I think it's roughly 510 days after the halving event, the market tends to put in a new all-time high price. So that would put us around mid-October, kind of early to mid Q4 this year for an expectation of a new Bitcoin all-time high price. I had a model posted. I think it's still published on Twitter 3 years ago that we called the next Bitcoin peak at $244,000. I modified that model after COVID because I also think that the inflationary pressures on the US dollar are going to become especially pronounced roughly 18 months after the printing began, which just so happens to fall right in line with the next Bitcoin price peak. So I think we could break $300,000 in this market cycle. And at that point,
when you say this market cycle, what do you mean by that? Give me a more specific time period.
This is Bitcoin's 4th market cycle. So it's had these huge run-up peaks. The last one, say it bottomed in July 2015 at $200. Over the next 29 months, it ran up 100x to 20,000 in December 2017. That's really when it got on the global radar. And then it had a drawdown of 84% to about 3,500 in December 19. That was the 3rd Bitcoin market cycle, which was again mapped onto its halving. Every time its inflation rate cuts in half of the supply available on the market to be sold by miners is reduced by half. So holding demand constant, price goes up. But of course, the market's constantly overshooting and undershooting its actual value. So, running numbers on those figures and looking at Bitcoin's hash rate, which is the energy being allocated to secure its network, I think we're on target to break $300,000 this year.
This year. So that's your target, $300,000.
$307,000. Yeah, that's our current model price.
307. I like that. I like that specificity. That's very exact.
Well, you got to listen to the spreadsheet.